Thursday evening, peoples. It is Bruce with Targeted Wealth Creation. One of my favorites, Round Hill 15 weekly single stock payers. So they're declaring on 9/19. They're friendly in the sense that they give this data on the evening of the 18th, right? Um, I'm late in getting it out, but I added a whole bunch of data that I think will really be useful. So let's go through all the single ones individually, then do the summary. And then, as you know, I did a WPay, which is the fund of funds for all 15. Um, and I did something kind of unique here. I summed up last week versus this week. What was the total payout for this week? And then I ranked and rated each fund as to like this one, but then you'll see a list and then the totals. So for instance, NVIDIA, they were down 0.66 in their NAV, right? They went from 47.95 to 47.29 on the close of 9/18. So that's last week they were up 1.3 from the previous week. This week they're down. But look at their distribution. So they paid more money, 45 cents versus 30 cents. So significantly more payout, thus the yield, right? So the price is similar, 66 cents down, but you went from a 33.21 yield to a 50.31. So in my summary list, I'll come back to I'll jump over there for just a second. So that's what I call a mixed bag, right? So I go through, I show you this distro, what is the yield, what's the current price, what was the previous distribution, how much more was this both in amount and percentage, and then what did the NAV do? So over here, I'm ranking, I'm going to come back to this. I'm ranking every fund, right? And then I show a total of 7.3, $7. I should make these dollars, guys. Let me do that. Oh, I have to make a few changes. So, dollar and dollar. All right. So just a little easier. So what I do here is then I only list a fund if both the NAV and the payment was higher. So Tesla, Palantir, Microsoft, AMD, and Google all had both go up. And I only list if they both went down. So as pointed out, NVIDIA is a mixed bag, right? So is Apple, so is Coin, right? So they went down on uh, their percentage, right? So weekly change is related to the distribution. And then NAV is, so here's one where the distribution went down, okay, but the NAV went up. So I call those mixed, I just leave them alone. But I thought this would be a little helpful. And then to me, this is major helpful. And the reason I started doing this in addition is everybody gets kind of WPay focused, right? I want the average. You know, my experience after watching Yield for 2 years, that I'll just be blunt, the Y Max sucks. Again, I explained to you that Jay and people get on there and say, hey, you know, what's the best investment? Well, the best investment is an average of all the investments. BS, right? I'll call it right out as it is. Now, from a lazy man's perspective, let's say the whole market is trending up, right? You're bullish on every single fund they have, and you're lazy, and you're just saying, I'm going to take the average. That way, if one or two or three fall down, I get the average, and it's 45% yield, and I'm happy. Well, in reality, that isn't the way the markets work. Most of these funds are trending funds, right? They're trending on a single underlying stock. And so therefore, when you buy a Y Max, or even when you buy a WPay, you're across 15 and you're saying, I'll take the average. In my opinion, it's easier to see. Now, this might require you flipping around once a month saying, hey, TSLW, I've been saying for a while, but Tesla is the underlying, is performing, right? Because it's beaten down and is coming back. Well, sometimes the stock gets beaten down and comes back for 3 or 4 weeks and then goes into a down cycle and back into an up. I'm not talking about being a trader, right? Weekly trading the funds, although some of you are good at it and spend the time, and kudos, you can do a better job. But what I'm saying is these average funds aren't always the best scenario, right? So Palantir has always been a strong stock, but again, it's dependent, in my opinion, right? I think it's the best software stock on the planet in the world, and it's because it has some uniqueness, and those uniqueness are really needed by companies and governments and so forth. There's just nothing there that does what it does as well as it does. There's Snowflake, right? Snowy, it's a light version of it, but very light. So your biggest and largest corporations and government entities, armies and things need the power of Palantir. But other corporations, mid-tier, can utilize a Snowflake AIP. All right, so all I'm saying is, I'm not, and Google is certainly trending, right? It's like of the Mag 7, it's been an average performer. Well, lately it's trending. So is that a 1 or 2 month? Sure. And these markets are fickle, guys. Like I said, I see more downside than upside, but the upside will come when the Nasdaq or the S&P 500 are moving in the better stocks, and there are better stocks in periods of times for those better stocks. So that's why I'm doing all of this extra. So if you're a WPay guy, right, and you're saying, hey, this was the distribution this week, well, you got around what, 58 cents? I forget right now in front of me what the distribution was. I had done a predictive video, and then I think I changed it when they actually paid. Well, I can't even remember, guys. um, this doesn't make sense to me, but go look it up, right? Whatever they paid was lower than what I had predicted. I had predicted like 58 cents. But common sense says, right? I have to look at the weightings again, that if they're trending down, your your W pay is going to trend down. Now, over the long haul, sure, things will probably be okay. But for me, I find this extremely useful, right? I knew Tesla was trending and Tesla, and I got out of my TSLY. Why? Because I have to wait a month to see what they're going to pay. And again, they don't do real well with the underlying Tesla. So when Tesla's roaring, I want something that's got leverage, which TSLW does, and I can adjust on a weekly basis if I think it gets overheated. Right? Just my style fits better. I'm not anti yield max. I'm just anti tactics that management tells you to do that, it's kind of like, you know, drip. Well, of course, but what is that doing for that company and that fund when they tell you that? That's how they get paid. The more assets under management, right? And my view is earn it, right? Don't just tell me what to do, because you're not always getting the best advice when you're talking about executives and companies telling you what to buy, because they're jaded. Where do they get paid? They get paid out of the management fees, out of how much is invested into, say, Title, the parent company of Yieldmax, or if Roundhill, right? So anyway, let's jump back in and go through. But I thought that was extremely useful. It would be for me. The other thing I had done recently is I keep this current. So this tells me, okay, over the last 6 weekly payments, and each time I add a new one, it jumps to the current six, right? Takes out the one that was, the bottom one and includes this one, but always has six. So you can see NVIDIA is struggling over time with NAV erosion. Now, that didn't keep it from paying 50% this time. So interesting, is that going to end up being return of capital? We'll see all that. Remember those interim reports? in my opinion, mean nothing when they give you an example of this is what ROC percentage is, because it's at the end of the year is all that really matters, right? Remember last year, Misty had no return of capital, but most of the yield max had varying percentages. So I suspect, based on the poor performance, although it does appear that MSTW and MicroStrategy's woken up a little. Let's see, is that going to last? I'll point it out when I talk about the distribution here. So I'm thinking through little things that I would want to know. So that's why I'm adding these in here for you. All right, let's get on with the rest of them. So what's the summary? Well, NVIDIA's been a very good fund. It's paid in the history of TSL, sorry, of NVDW, right, which goes back to 29, I think is when 219 is when the fund launched. 228 was the first payment. It's had a respectable $13 paid out, and the NAV has only eroded $2.60. But again, NVIDIA doesn't look like it wants to go on to all-time highs. And if you saw my video on where I think the markets are going, I think we're in a topping process. Again, I don't see this as the elevator going down in 3 days. We just massively go down 20%. I see this as a up one day, down another day, but probably not continually going on to new highs. All right. We may even get to the point that we have lower highs and higher lows. But we'll see. These things, I kind of like it because it's enough not to scare people out, but you may continue to see insiders dumping and all the other things that I said are a sign of the times for an overextended market. But let's see. Okay. So Tesla, again, doing a great job. Last six payments, 6.54. It's not perfect. It'll move up 255, down 218. But look at this now. 292, 497. I haven't looked to evaluate technically. Maybe Tesla's getting a little bit stretched in the short term, but I really do like it over time here. So this is a positive indicator. Now, how's it done since 219? Terrible, guys. If you've been in this fund since the beginning, you haven't done well. But again, has something fundamentally shifted? Absolutely, right? The political stuff of being involved in Doge and the burning of the cars and, leaving out politics, but that really caused a lot of damage psychologically to Tesla. And Tesla's a lot more than automobiles if you don't know that, right? Most do. And so people are taking it, Elon is not being such a social butterfly that he was and being a political lean one way. He may still do politics and lean a particular way, but he's letting his company talk more, right? Which I think is smart. He was trying to help the government, but we're so screwed up there, guys. It goes back to it's a swamp. It's an ocean. It's not a swamp. You can drain a swamp. You can't drain the ocean. It's just too big, and that's what government. Until we go to people that aren't politicians that just have a real job, go in and work for 4 years or 6 years if you're a senator, and go back to your job and do it for quote the good of the country, then we're going to have this broken system that we have today, regardless of either party. Certainly, you can have a persuasion of liking one strategy versus the other, and I do, but I don't try and bring my politics in to my YouTube channel. If I do, sometimes I make a mistake, then I apologize for that, but there's no intent of doing that, nor do I want to hear other people's views, to be honest, whether it matches mine or doesn't match mine. All right, so 654, that's trending positive. The stock 71, 64, 56. Look at this one when it was in the midst of really kicking butt. So Tesla is awoke, right? If you haven't seen it. Now, this is still horrible, but it wasn't long ago when this was $10 and this was like $12. So at least it's getting to where it's ahead. But that's the determination that you guys have to make. I mean, I get a lot from this data to know what's going on, excuse me, and even my own technical analysis. And I don't really try and be a a trade, swing trade all the time. But that's why if you want to buy WP, go buy WP. But just understand averages aren't always good. And if you don't have time and you're busy working, I get it, right? All right. Apple. What do we have here? Well, Apple is still positive over six payments. Now look at this. It went from 23 cents, 23 cents, 17, 23, 48, 23. We really haven't had, well, yeah, we had a 14 there. So on the weekly, we're up in the NAV and we're down on the payment. This is one I call mixed, right? All right, let's keep going. So coin. Another mixed one. Look at it dropped from the big 115% yield, right? This is what we call yield on cost. What's the price of the stock at the time of the declaration and how much did they pay? Thus, we get a yield, right? We project that out annually to get a yield. So it's up $2 on the NAV, but down 40, 50% in the payout. Again, mixed bag. Not as negative as both being down or as positive of both being up. So what do we have here? So Palantir still over the 6 week, all because of this 1 week, right? But if you go back 6 weeks, so 1, 2, 3, 4, so in a couple weeks this will disappear. But it's actually trending up because we were up 3.1 and we went from 57 yield to 72.5 yield. So this is positive. You see it in the charts. Again, I like Palantir a lot. So if the market's not mini crashing or really, Palantir's trying to swim against this massive current of downturn in the market, right now that's not the case. It's toppy. Things are down one day, up another day. Again, I don't really trust the markets, but I'm okay in owning PLTW here. I wouldn't be in a massive position because I think the markets are toppy and they could cause it to go down. But I think on its fundamentals and what it has in IP, I don't care about sales ratios and PE ratios. I care about the product needs to be bought. The product gets embedded, okay? And don't get politics. Guys love to say, oh, they're in bed with the government, they're spying on everybody. You guys are, yeah, there's too much conspiracy theory on that. All right. The government didn't even want them. Go back and look at the history. The government refused to buy Palantir. Palantir sued them and said, you're not openly looking at our software. They more than earn their way in. Anybody who thinks that they were in bed with the government, okay, they had to fight their way in. I mean, massively fight their way in. They were just flat out rejected, right? Militaries and government institutions tend to want to do the same things they've been doing. They're not the most innovative, right? Because a CEO, an individual, can hugely be compensated on the performance. You're running a government organization, are you really incentivized because the government organization is performing better? No, that's that mentality. Oh, they're a government worker. You don't get that much innovation. And look at our current political, unless you kicked all of those career politicians out of there, you're never going to have a system that really helps individuals, that helps the country, in my opinion. And I don't think that's anywhere coming, but that really would solve the problem. All right. So Palantir, two greens, right? Both of them are up. All right. AMZW. Down 49 over the last 6 weeks. So that's almost flat. We're down, we're up. No, we're down on both. So Amazon falls in to our double bucket, right? Both negative. So we've had Palantir and Tesla as the two of the first six as both positive. Now we'll have Amazon and BRKW, Berkshire Hathaway, both down. All right. So if you care, 30 cents, 30% yield, nothing great. Okay. Even lower yield here. This is kind of a defensive stock. Well, we're not selling off that much in the market for defense to really be working. There's still a certain FOMO in there. Like I said, we'll swing up one day, we'll swing down. So we got the quarter point. It's going to be likely what new economic data do we get on Friday? And so we go back to the near term events impacting, right, the news. All right, 15. It's overall up $1.32, which we had four consecutive up periods after pretty disastrous down here. So what's, oh, let me give you Amazon. So Amazon's still holding in there when I look at the period of time. Remember, we're in this second tier that launched on June 18th. Those first five launched back in February the 19th. Now we're dealing with June 18th for the next five, and then we're July launch for the final five. So they all vary a little bit. So 5 and 1, Berkshire Hathaway is 3.71 and 3.38. How did it do? It went down in both categories, which I showed you just a second ago. All right. So not much of a yield. All right. Hui, the owl. Yeah, nice, but down, right? So you had a 105, 83, 74. I mean, this thing has been on fire in general. And then it really got hammered, right? Right here, 521. This is like $10 retrace. Then you had a 925 and you had a 76. So, as you move forward, right? You're going to have a 9 in here. And once this 5 drops off, we got 1, 2, 3, 4, 5. So in 2 more weeks, if this maintains itself, we shall see. Again, you guys know long term, I'm not bullish at all on Hood. Near term, 18, 24 months, this is proven that they're innovative and they're likely to do very well. But again, can the markets take them down? You bet. They're highly valued, right? So an ugly market, a 20, 30% retrace in the Nasdaq certainly would take them with it. All right. And but look at this. I love this. I love those positives. I mean, nobody can argue with it. If you've been in it for 2, 3 months, you're doing very well, right? It's the new buyers that have to be a little bit concerned, right? We get up to 71 retraces. We get up to 71, it retraces, right? We're getting up close to that again. So you got to be careful here. All right. But fantastic results. All right, let's look at Facebook Meta. $1.93 over the last 6 weeks. We tended down just a hair, but look at this is the mixed bag, right? So Meta is up $1.76 in its underlying price. Because remember, in these funds, when it starts to move, they've got 120% leverage. So that's what I love about Roundhill. If I'm not bullish on it, I'm not buying it. So when it moves up, I want it to move up more. And that's a simple thing. Otherwise, I don't want to be in it. WPay is saying I'm bullish on everything. Really? That's why it's not my favorite. But I get it. If you want it, nothing wrong with it. So close went from 42 to 38. It's better than, we got 45, 80, 80. Mixed bag here. All right, let's take a look at Netflix. So's Netflix. As I said to you guys, normally I would see this as a defensive stock, and there is a slowdown in jobs. It's stagflationary. If you watch my video on the market, we've still got inflation data, right? I think the next caveat will be in October around it's somewhere from the 11th to the 14th. I don't recall the exact date when the Bureau of Labor Statistics comes out with the final CPI for determining your COLA. Any and all of you guys on Social Security, I've been on Social Security for a number of years. Your COLA, cost of living annual increase, gets set off of CPIW, which is a unique set of those, and it measures the third quarter. It measures July, August, and September data. Those 3 months, year over year, to calculate what your COLA is. Well, we have 2 of the 3 already in. We already have July and we already have August data. and they've heated up a little bit. Right now, it's running about 2.5%. Okay. So this next one, that, like I said, I forget the exact date. They're usually anywhere from the 10th to the 15th of the following month. So in October, you can look it up, somewhere from the 11th to the 14th, we're going to get the October data for September. That does a couple of things. It tells the Fed, it tells other people, hey, we're heating up. Right now, the propensity is we get two more cuts, and that's favorable to the markets. But I'm wondering if Powell and the team doesn't say, yeah, it's too much inflation. If we move up beyond 4%, increase on this next one, the COLA will stay under 3. It'd probably be a 2.6 COLA, maybe a 2.7% increase in the COLA. But it's trending up, and that's stagflationary, right? So you got cost of living, you got all these costs going up, but you got less jobs available, right? AI has an impact on that. Companies are more likely laying off than adding. Again, and in my video, I talked about why the data keeps getting revised and how they could go about fixing that. But do I expect governments to be that nimble and get things done? Not really. Okay. So NFLW. Sorry, guys. I'm always going to interject my thoughts around a lot of stuff. I'd probably say I got a 65 to 70% people that love the rant, and I got that other 30%. Bruce, I just have a little bit of time. Just give me the data. Well, I've kind of done that already. All right. If you don't want to listen to it, don't listen to it. But most people find a lot of valuable insights, and it comes from 45 plus years of being in the markets and studying this stuff, guys. So down, look at this one massively. So I started with Netflix as saying, I see this as defensive. As we go into recessionary environments, people are going to stay home more and they're going to watch more stuff on TV. And Netflix is certainly cheap enough to allow you to do that to a greater extent. Okay. So this is not positive, right? So you can have a recessionary environment and just not have something sickly that does well. So this is a sign that things are surging. But when that payment went up, you declined in your NAV. Now we decline more in the NAV and the payment. So this is a double loser, right? It's paying less and it's declining. So that's why it's on the list, right? There you go, Netflix. The next one is Microsoft. Look at this, though, guys. MicroStrategy. That's a change. All right, let's move through these. So 29, not much of a yield. All right, Microsoft. Oh, so look at this. You not really positive. I'm not used to seeing this from Netflix. I mean, I was following it was when it was Netflix and Yieldmax. I never bought it, but I was always impressed by it in a lot of ways. I just didn't trust it because it was very high. Well, that sort of bore out. I'm glad I didn't buy it. All right. So Microsoft down 495 over the last 6 weeks. Look at this. When's the last time it was green? Back in August 1. I mean, you got some slivers 0.21, zero point 0.6, 0.36. I mean, it's not like it, well, this is a big drop and this is a big drop. But it's just, you know, they goosed it here and said, okay, it went down 0.9, but we paid. Now it's falling into the category of both, right? Both things are down. All right. So 28 cents, 31% yield, but it's got to frustrate you. See something like this, people go, "Oh man, I'm buying it." And then what happens, right? So that's the nature of the beast. Except there are some companies that truly have fundamental products and things going on that can beat the averages. All right, so MicroStrategy. Look at this. 1, 2, 3, 4, 5, 6, 7 weeks, right? Since it launched, right? We're in these 725 launches now. 7 weeks and it turns red or it turns green and nice green. Although so if you've been in it since the beginning, I think I bought 100 shares of this guy just to experience it. And I did that with MST, right? The 200 percenter, because I was hoping that we get a surge. Now, that's a thought right now. How's MST doing? I imagine it did well. I'll have to pull it up on a chart. Let me do that on my other monitor while we're talking, guys, and see. Now, that's a 200 percenter on the day. So, did we get our money's worth? Oh, yeah. Look at that. 8.43%. Now, that's not going to make up for all the downtrend before, but it goes back to that's a positive sign. And that's what you want to see. So I imagine what did MSTR? Sorry guys, I'm telling you what I saw, but I'm using another screen here to do it. Okay. So MicroStrategy was up 5.89. So they were 180% or so of MicroStrategy in that. All right, guys. So maybe that's the trend. I hope for you guys that are owning these things, because I've been saying the Bitcoin incomes are the place to be. Well, let's see if MicroStrategy can get going and hence have that. A lot of it probably it has to get going on also on the heels of Bitcoin, and Bitcoin's been up, but it hadn't been doing that. All right, so you can see how ugly this is from being in it, but this is noticeable. I'd keep my eye on this, guys, and I am. Okay, AMDW. What did we do here? Well, we went up percentage wise and we went up a hair, so this is a double winner. All right. So you got MicroStrategy and you got AMD, and then your last winner. This has been a great one, the Avco Broadcom stock, but it's a mixed bag this week, right? It's up in the weekly change for the yield, but down in the NAV. So you got a lot in here. What is it? 1, 2, 3, 4, 5, 6, 7, 8, 9. So you got 10 of the 15 stocks. Oh, that's not true. Okay, 1, 2, 3, 4, 5, 6. So you got 6 of the 15 stocks that are mixed. Either their NAV is up or down, and the other corresponding yield is up or down. So that leaves them a 1 up and a 1 down. So they're neutral. The ones that get 2 positives, right, 2 points, are the ones in the left column, and the one that get minus 2 points are these over here. So we're still 5 to 4 weighted, but look at this. Look at the payout. We went from 883 last month to 730. Unless I messed something up, but I don't think so, guys. So the ones that went down, look at this weekly change in the percentage of, not NAV percentage, in the percentage of the payout. All right. So 28, 34, 21, 33, 78 cents on Netflix. Went from $1.13, okay, to 23 cents. That right there, 77, that's 90 cents right here. If you take that out, that puts you back at just in one stock, guys. All right, let me continue. I'm almost done with this stuff. All right, a mixed AMD is. I remember buying AMDY because I saw a surge there. Okay, and I owned it for a few weeks and I got out of it. Right. I don't own any AMDW now. If I did, if I went back into AMD, now the chips have started to move, but I don't trust the market, so I'm not really a candidate for buying that right now. This is pretty ugly, because we got this $7 loss in here. We'll have it one more week before it moves out, but we got a 3 and a $2. All right, Avco, as I mentioned, a mixed bag. The payment went up from 57 to 65, so it went from 49% to 59%. But our NAV is eroding. Guys, why I'm doing these in pink? People complain about this red. So every shade of really any real red is not working. So I almost have to go into pink or something. So decent yield, positive for the, well, this is getting ugly now. Did I make, are these updated? Yep, 298. So we are close to a break even here. And really, the killer is this $5 one. And now the $3, because we had this huge one here at 9. All right, Google, clearly trending in the right direction, right? You had a 15 cent, you had a $1.48, one other close to $2, and then it's been nothing but 205, 5.5, 180, 302. And that'll happen. You look at your Mag 7 and the money's flowing in some of the guys, and Google's been behind. So with recent stuff, Google is going on its cycle. I always say there can be not sector rotation, but say there's money movement within a sector, like a Mag 7. So where's the money going? Well, the money's going into Google, the money's going into Tesla right now. It's not going into some of the other places as much like NVIDIA uh, that it was. All right. So what does this look like, guys? This tells you similar but different because I don't really compare the previous weeks. But if you just want to see the fun and which one's kind of the best in its group, right? Because I have to group them differently because this is time in the market. So my 212 calendar day time in the market, who's the winner of that? Well, I didn't even check to see if these changed much, but it doesn't appear to be. The winner is still um, Coin, or sorry, Palantir. So no change there, right? 82, it's still the closest are, Coinbase. And then now look at Tesla, though. Or sorry, that's NVIDIA. What has Tesla done? Tesla's now turned positive, it's turned green. I've pointed that out before. It's moving. All right, let's go into the second group. So I got Amazon. I'm sure Hui's winning this. I can't see why they wouldn't, right? It's a massive outperformance. So of those five, nobody is really close. Oh, you know what I need to do? I need to leave these on. I'll change that, guys. So when I have the scroll for this way, but I don't have the scroll for that way. Let me see if I can fix that. Yeah. All right, now we can see what's going on. All right, so Hui wins that group. How about our third five? Well, no shock there with Google surging. Although Avco is got a 169, it's respectable, but this thing just keeps moving. But again, that'll change eventually, right? So I find this data helpful. And then over the last one, guys, just to repeat, if anybody didn't see this or wasn't watching, I'm looking at all 15 funds and saying, okay, they paid 730, declared 730. Last week, they declared 883. That's down 17% on the distribution. And then I did a little thing over here and said, I'm only going to show you when the NAV went up and the distribution went up. So I had five funds that happened to. If the NAV went down and the distribution went down, I had four funds. So I got nine. So out of 15, that leaves six that were a mixed bag, like NVIDIA. Okay. They paid more. They paid 49%. They went from 30-cent payment to 45% payment. But their NAV went down at, 1.38%, not massively down. So that's why I call these mixed, and I don't bother to put the name over there. All right, guys, that's what I got for you. Bruce with Targeted Wealth Creation. Hope you enjoyed this. Give me comments. Please like and please subscribe if you're not subscribed to the channel. It helps. Appreciate it. I like to do a lot. I try to respond to what you guys ask for. And if you really want what's trending in the market in the commodity super cycle, go over to my Patreon. I'm not even going to bother to list the name, but it's under my channel. Go under the channel and look at my Patreon. That thing, I'm close to 150 people in my Patreon now. The community is growing. We're getting outstanding results. And that is the place to be, guys, for the next number of years, 4, 5, 6 years in that cycle. There'll be some individual AI and some stocks, but the percentage gains in the precious metals and the miners will outpace the Nasdaq. They will outpace the S&P 500, the Russell, all those indexes over this proven back over the entire decade, right, of the 2020s. It's just that they'll significantly outpace over this next period of time. All right, guys, that's what I got for you. Again, Bruce with Targeted Wealth Creation. I'm not a financial advisor. This is not financial advice. Talk to you later. Bye for now.